Hi, everyone. This is the strategy week number 25. Today is 6:16 in the evening. I'll start with the strategy for myself for this week, and we'll backtrack into the logic. Shorting rallies with caution. So on strong days, my instinct is to sell bear call spreads, for example. The other day, I shared one on the small caps on a big up day. The next day, it turned out to be profitable, even though the next day was a green day in quote the market, and that's the problem. So the trades are working because we're choosing to short strength. And I have friends that are among us here in the group. They don't agree with it. They think that Main Street is suffering, the economy is not great, therefore they should be shorting the market. Please separate those two. Main Street is not Wall Street. Trade what you see in front of you in the stock market. And what we're looking at here is the strength in the QQQ. This phenomenon had happened already in the dot-com bubble. And now it's even worse because the companies leading are $3 trillion, the top three companies. More on that in a minute. So it definitely can continue. Look at the leaps and bounds that this market is doing. And when you contrast that with the 2,000 stocks of the small caps, they're not, they're going the wrong way. And this is like 20% below the all-time high. The all-time high is much higher than here if you look left far enough. All right. So we have super strength in the SPY and the QQQ. This is the SPY. The handful of companies that are super strong. Let's just start with the three. Talk about three. Microsoft, Apple, and NVIDIA. They are about 19% of the S&P. You can't say that, quote, the market is green. Those three stocks, super strong, they're tag teaming rallies. The bears have not synchronized the selling. Nobody is sold net. They're selling A to buy B. And if they sell B to buy C, and if they sell C to go back to A. So they're tag teaming. Okay. For the first time, I bought a naked put on the SPY last week, and I'm not red, which is pretty strange because we had 2 green days after that. So I will update you on that one. Maybe I'll recommend it as a buy. So maybe the first target will be to drop back down to 525, 24, and then pop a little bit and then drop back down to 512, and then do the same down to 508. Here's another point of contention that I have. Those dozen stocks are skewing the actual report. So if you look at the stock, you say, whoa, this stock is in a breakout. It isn't if you look at it completely. So this is the S&P equal weights. So every company is 1/500th of the S&P. We haven't made a high since April 1st. So I should be very selective with the companies I pick. I wouldn't go along the market unless I'm a momentum trader, which means I'm condoning again to more trading, less investing. Also, we don't always know what's going to happen. We have the suppliers element. We have such cauldron right now. The world is a buzz of stuff geopolitically, financially, economically. There are a lot of question marks. And the elections is not carte blanche to just go all the way long because we can come up with surprises along the way. Okay, so it was a good week for the bulls. They still haven't flexed their muscle synchronized. So they're not going up all indices at the same time. There's always one or two lagging. And vice versa. Conversely, I should say, the bears have not synchronized at all. So there's no net sellers yet. They haven't, quote, pressed the short. Keep the emotions on the sideline. Get upset, but go for a walk and then come back and trade, not upset. I will see you in the trade room. Be safe out there.